Hey, folks, we'll let the room fill up just a little bit more and I'll come live. Welcome, everyone, to the Kendall Report, where I share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, we are back into very unique times on the planet. I'm going to go through all the discussion of what I think is going to happen next, what's already happened, and try to reconcile all this. All right, folks, a lot to discuss tonight. It's interesting. I was going through some information, and I'll share this with you. I just went into chat, and I asked it to go back and tell me about all of the collapses that we've seen in the markets going back to the 1800s, right? So panic of 1893 was 2 years long, 40%. Bear with me a second here. So 1907, 1 year, 50%. Approximately 29, 89%. That's the big one, right, in numbers. 1937 and 38 was kind of the echo on the downside. That was 1 year, 50% again. Crash of 62, 27. There's a point here. Just stay with me. So 73, 74 was 45. Black Monday, 87. I was there for that one. 22.6% in 1 day. All of these are years except for Black Monday. .com bubble was 49%, 2 years. And then we had global GFC, which was 2007 to 9, 1.5, approximately 54%. Of course, the pandemic, 34. And right now we're working on probably about 15% plus at the moment with the downward slope. And there's something I put a tweet out just a little bit ago, and I want to unpack this. It was I was prepping ahead of this meeting. And one of the things that I think that we need to discuss is all you hear is tariffs, 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 tariffs. And I tried to mention this in Substack, and the Substack was saying this is the noise behind really what is going on from the standpoint of the reality. What we're seeing here is basically 4 years of fraud and pumping the market coming out all at once. It's not about, it's really about, and I mentioned this on Friday's stream that I did intraday when markets are open, is it's not about the tariffs. It's about the realization, and this is the danger of the current situation we're in, and it is that the lack of confidence or loss of confidence in the system is what could drive this market even further down. Who knows? Maybe Jim Cramer's right. Tomorrow's Black Monday. I'll show you our database here. We completely dumped everything, as I suspected we would, and I discussed on Friday. So the realities is that we're from a portfolio management company, we have been in basically protection mode, but we're in full protection mode now. There's only a very few things hanging out in portfolios, so we're getting close to that 100% cash in some of the portfolios. There was a lot of stuff moving around. But my point is that what we've watched, think about this. Last year, they had to adjust the employment numbers by 800,000 plus. Everything that we've been looking at, virtually, this is not, by the way, a political statement. It is just the truth, is everything that the Biden administration did, from the inflation, I'm doing air quotes here, inflation act, all of that stuff was just a scam, just throwing money into the economy to make it look like it was going good. And meanwhile, we now know that they were fleecing the entire country, all these NGOs and all this stuff. I mean, it's all been revealed. And I think this is one of these moments in time. The folks that are getting punished right now are the people that benefited the most. I know all of us own stocks, have money in the markets. Right now, I think there's roughly only about 18% of the people really own stocks. So this is the top end. I'm hoping that you're out. Those of you that are using our portfolio software, you should be out. It should have been getting you out of the harm's way of anything that was deteriorating. And whatever's left, they're throwing the water, what they say, they're throwing the water out with the baby with the water. And so the results of where we are right now is at getting to what could end up to be a catastrophic level. And I'm just going to say this stuff. The beauty is, it's interesting because some of our European friends, and I love you guys, you know that. I've got friends in Europe. I've got friends all over the planet. They don't like being pointed out that, somebody said they've watched me for years and they're never going to watch me again because I said that the U.S. is being taken advantage of. I guess it really was because the game is over, okay? And that's what we're seeing on the screens. We're not seeing tariffs, by the way. We're just seeing that the game is over. And Trump wants it like this. They want to, I mentioned this, I think, in a couple streams I've been on every day. You guys got to be impressed, right? I think Tuesday, this is like 5th stream in a row. I'll be here tomorrow again, okay? 8 o'clock is going to be the time that I come on. And there's just too much going on here. And this is one of those times where I get tweets and emails, Bob, we need you out there. Well, I'm here. So we're going to continue to go down this trail. But this is what the administration wants right now. They don't want to destroy the market, but I mean, they're basically telling you that they're trying to rebuild the Rust Belt. They want manufacturing back. And I've said this before. We've got a lot of bodies that came into this country in the last several years, and they're probably really good blue collar work. And I don't think they're going to be able to get rid of 10 million people. I'd like them to get rid of all the bad guys, but I think a lot of people end up staying here with what we've seen. I don't see that all getting washed away. And so you need to find the best of the best to make those folks part of the society and be the melting pot that the U.S. always has talked about being. But a lot of folks are going, well, they can't rebuild. We don't have the materials. We don't have anything. What you're talking about, folks, is maybe a whole decade of rebuilding of America and all of the manufacturing. And that's what Trump's going. So it's the era of the working man, maybe not so much what we've been playing in forever. I was flashing back. I'm just going to go on just for a few more minutes. I was flashing back to when we were all hanging out. I met a lot of you back in the pandemic because prior to the pandemic, I was only institutional. All my subscribers were institutional. I didn't really do any retail. And it's interesting because I told you folks then the very, very best inflation hedge was actually the stock market. And I remember talking about This is back, go to 2020, talking about, the market's going to 5,000 plus, not even thinking about 6,000 basis the S&P. Well, we've seen that happen. So what's next? I think we have to take a lot of the air out. I made a snarky comment on a tweet that, hey, maybe we have to drop 40%, but look at this. I just, matter of fact, I'll move this over so you can see this. This is my screen, but this is not only everything that happened out there and would it happen, but the reasons why it happened. And, so it's kind of this would end up being a pretty good source, but a lot of these 1 year, 2 year, collapses, 45 to 50%. 29 was the big one, was 89. So yeah, it's here. And, I think that's it. I at the moment, by the way, I don't think there's going to be anywhere to hide. There's not going to be any safe sectors. People like to do pie charts. Pie chart guys are they're already been creamed, and they haven't made any money for 2 years. When the market goes up 52%, they're up 10, 15% tops using ETFs. I don't know how the best way, I wouldn't call it despise, but one of my old mentors used to always say, and this was before ETFs were around, is that you can make money with mutual funds. That's all there was at the time, but you're never going to get rich. And this mentor I'm talking about, his claim to fame from 1974, which would have been the bottom of one of these, of the low there, that's the 45% from that point to 1980, when I met him, his claim was that every $10,000 he invested turned into $1 million. So it was a 10-bagger in 6 years. And he was nicknamed the professor. Some people have called me the professor, so it's an honor. His wife is still alive. He passed away quite a few years ago. But it's just one of these things that keep happening here. So let's talk about something here. 1987, I lived through. I wrote a newsletter then as well, and it was for the firm that I work for. And one of the things I said on September 16th of 1987, I've told you this before. I wrote a newsletter. It was called "The Risk Reward in Owning Stocks in the U.S. was Zero. Get Out." That was the headline. And it was about a little bit less than a month before the crash of 87. But let me tell you something about the crash of 87. I had to speak at the international conference in Mexico City in November of 87 in front of a fairly large group. It was an international conference. And I started off my speech by saying I checked the calendar and it is not 1929, it's 1987. And let me tell you why we're not going into a depression. Because everybody was freaked out because the actual decline was roughly 36% from the August 25th high down to the October 19th low. I know I've told you guys we did 40% in 3 days. That was not right. It was 5 days, and we did 32% of that decline during that time. So my point is that these things happen all the time. They don't always mean that you're going to have this big recession and the crash and the whole economy is going to come apart. But there is some issues. And let me go on here for a few minutes. I've been thinking about this for several hours. What I think that we're going to see is this complete reset. Is 20% enough? Probably not. There's probably and I'm going to go through the technicals here in a few minutes, and we'll map out that change. It's pretty, what's happened just even with the reopen tonight, when we look at the charts, they're getting destroyed here. And whenever I've talked about this, whenever you destroy market structure at the level that we have, it takes a while to rebuild. So we'll go through all that. But the point is that we're going to have to wash out not just all the excesses, but all the fraud. I mean, the money flow that was around this machine was monster. If you do reduce this by 1 trillion or plus, that's cash flow that's not going to be in the economy. Okay. And even though most of it was fraudulent NGOs and all of that, it's funny, non-government organizations who act like government organizations, okay? That's what we're seeing. We're watching this stuff get washed out. And why do you think all these protesters are in the street with perfectly printed signs that somebody printed for them? Because the people that are getting hurt are out there putting money behind trying to get the protests to somehow stop Trump from doing this stuff. I don't know what happens. I don't know. Do they destroy the whole economy? I talked about this before. Do they have to destroy it and then rebuild it? Scott Bressett is a pretty smart guy, the Secretary of Treasury. I talked about Howard Lutnick, which I wanted everything in the world to work for that guy back in the late 80s, early 90s. Thank God I didn't, because I would have been in that tower probably early in on that morning. I used to get up quite early to get into the office, so I would have been there waiting for the plane to hit. But the point is that what we're seeing here in the economy is a major adjustment. Now let's talk tariffs. I know I spent 18 minutes talking about this, but just bear with me. In the next half hour, we'll go through some of the other things that we'll go through all the technicals. We'll take a look at the database, all of that. But when you look at what's going on here, we could see ultimately one of these 50% declines. And somebody made a comment. So you're saying that the SPY's going to 200. I'm not saying anything. I'm saying that there's no reason to own this market right now. I saw somebody on a stream on Friday saying, "Oh, I've been scaling in doing 30-30." He's already down 12% on the 30 he put in on Friday. So there's no need to do that. And I'm going to be, I've got a window here that I'm going to be very active. I'm going to bring in, because one of the best things that I did for you folks back in 2020 was getting you on the WaveTech platform so we can catch a lot of stocks in the turnaround. So I'll talk about that. I'm probably going to do a couple special training sessions. So I'm going to be around a lot. So, enjoy. If I come back, and do me a favor, hit the dang like button, okay? Because that algorithm, it does help a lot. So do that for me so I can make a comeback. I'm starting to see the channel grow and subscribers again. So subscribe, do that, hang out, and we'll get some good guidance and some honest, good stuff. Trust me, there's no stops at 4,800. Everybody's out. This is just market get me out orders. So we used to on big market days like we've seen lately, there's no stops. Okay, it's just people throwing in market orders. They're just burning money, man. They're just get me out of the market. And that's an old floor term, like, oh man, we had a lot of get me out orders. They were just markets. They didn't care where they were getting filled, just get me out. And those are the kind of markets we're in. And I see, just looking at a couple comments, I'll interact for a couple of minutes, we got to the place, and we all knew this day was coming, by the way. I've talked about it. I mentioned it, I think, in Friday or Thursday's stream, that I had written some articles back in 2017, like asking the question, what is the national debt? What's the top there? It was like 17 trillion. And I was going, was it 22, 24? Well, here we're pushing 37. this can't go on. The game's over, folks. And this is a good thing long term. You know, are we going to see real estate, other sectors? I'm going to be digging in, so I'm going to be around. So, you know, I'm going to probably be doing daily again. We'll see how this week goes, and I'll be able to judge this week on what I'm going to be able to do. But just know that this is not over. This is the beginning. And if you go back, if you look at what we've seen, and I've been talking about this in Substack, if you look at my headlines on Substack, you know, about tops and distribution and all this stuff, you know, and you got jokers. I know I will say I roasted Tom Lee the other day. Good God, turn the sound off if that guy comes on TV. Okay? You know, do not try to buy this thing. We're at, I think we've rallied about 0.6 off the lows. I'm looking at, I have another monitor over here, my trading desk over to the left here, and I'm just looking at what's going on. And it's bounced a little bit. Let me just look at something here. Bear with me a second while I just get some, I just want to see how low we got to. We got to 48. Bear with me. 48.32 so far, and we're 49.10. So we rallied almost 100 points. You see there's going to be a lot of trading opportunity here, but the liquidity is non-existent. And that's something, there's so much I can talk about. I've spent almost a half hour. I haven't even brought up a chart yet. Yeah, just like great comments, folks. Stay active here. Yeah, it's funny. Gregory Graham saying that use options. I'm an ex-market maker in options. We love you guys, okay? Because we never bought any premium. We're always naked. You know, we're sucking into premium. Premium decay will kill you. One of my old buddies used to sing a song every Friday. You can pay me now or you can pay me later, but you're going to pay me. And so probably spreads, straddles, things like that. There's some good strategies. Outright owning calls or puts are pretty much an amateur game. Not that you can't make money doing it. Somebody's going to say something, but it's not how the pros play. So let me get out of this loop a little bit here, and let me try to consolidate here. I don't think this thing is going to be over for a while. There's going to be months and quarters of this. I was talking about a recession, a slowdown coming in probably third quarter this year. I think that's still on track. I just think things got very frothy, and I think that's appropriate for where we are. But this is going to take a while, folks, and they're going to, the media is going to blame Trump, and this is all Trump's fault and all that stuff. It really isn't. And Trump has even said it. This is all, and him included, by the way, when he was president earlier, and he was trying to do some of this stuff, but now he's shutting everything down and everybody's freaked out. But every president, you know, going back to even Reagan, has been inflating these markets forever. And it's about time maybe we get some integrity in the markets. If you recall, last year I was on this big, especially in my Substack newsletter. If you don't get the Substack newsletter, it's kendallreport.substack.com, $8 a month. It's worth it. Never know what I'm going to come up with. I usually write it late at night. It usually comes out around 5:30 a.m. for New York. So yes, I will be up for many hours going down the road. But what I've been talking about is just this whole integrity thing, the 800,000 you know, overstating of employment, all of the fraud, all of the cooking of the books, all the things. The Fed's 50-point discount drop, by the way, in September, no, that was as political as it ever gets. And now that Trump's in there, they aren't going to move. I don't expect to hear anything from the Fed right now because there's nothing that they're going to perceive that they could do to do this, because basically all we're watching is the air is coming out of the balloon. And so we're going to have to let a certain amount of air come out, get some stability, get some kind of rhetoric or backdrop from the fundamentals and what's interchanges with the current administration and all of our trading partners, and just see where and Trump's been saying it, Scott Bessett's been saying it, Howard Lutnick's been saying it, Lucknick has been saying it, everybody's been saying it. You got to give time, and it's going to take time. But you know, if you didn't see the beginning of this stream, you know, we've had, let me just count them real quick. We've had 10 declines of 40% or more over the last 100 years. We're probably on to another one here. And it's interesting because it comes right after our 52.5% compounded rate of return on the S&P. That happened. Now you're getting a bit of a correction off of that. So I would not say there's any chance. Just looking at a couple comments, then we're going to move on to the technicals and overview of stuff. Yeah, so somebody going, the other countries will move trade to others. Who? Who's others? Maybe they'll trade amongst themselves. Maybe the U.S. won't buy their stuff. I don't think people get how big these imbalances are and what it really means. I see Asian message reviews. Yeah, there's no happy ending here. Haha, pun intended. Where's the bottom? Let's get into the technicals. Thanks everybody for hanging out. We haven't had, this is great. I'll be glad when we get back up to 1,000 live viewers. What may happen this week, by the way, let me set this up. I know it's kind of in the middle of the stream, but I may do a live like Wednesday, like I used to bring in real time so we can be having the markets trading. I know they're trading right now, but so we're down 3.6% now, down 183. So we've rallied over, looks like over 100 points on the S&P. I wish I was trading right now, but hey, let's go ahead and let's start digging into the technicals here. But let's start off by, let me get this set up and then I'll get it all ready for you. All right, so let's go here. So let's get into the WaveTech database. So if you're new here, we have several platforms. We manage about $15+ billion in the stock market with investment advisors and other folks that use our platform. This is our old legacy platform. I'm on a Mac, so I can't bring up our other platform, but that's okay. So we're looking at 24.18% bullish. And if you've been hanging around for a while, if you remember, as we came into January of 24, I was talking that we would have back-to-back double-digit gains. Otherwise, 23, 24 would be another one. And that all of that was based upon the configuration of the database. Now what we're in complete liquidation. Somehow utilities is still hanging on in this thing. We've been long utilities for 274 days. I'm waiting for that last trigger to pull out. There's no opportunity there. The reason why that's actually probably hanging in is because of AI and because of energy. You know, we have an energy shortage right now. So this has been a sweetheart sector for me for a while. but I still think we're close to just letting everything go. But we're down to 24.18%. And basically, there's a number at 22. If we go below 22, we're going into what I call full liquidation mode on intermediate. That just tells you that things are not coming back for a while, that we could go down to like a 12% bullish. I'm going to bring you another screen. I know these numbers are small, but let me just talk about a couple of numbers here. One of the things that happens is the typical holding period for these intermediate models is about 200 days, 220 plus, which is 1 year basically of trading days. So right now what we've seen with this 24%, we have completely liquidated. When you see a liquidation, we were around 50% coming into year end. So we are already moving towards a protective standpoint. And now we're full on. And I would bet that probably this includes bond funds and other funds. If I went through the database, see what was long, that's what we would find out, is that there's a lot of symbols that are probably, bonds have caught a good bid here and all that. So but this is where we are right now. Let's go over to the daily models very quickly. And the daily models now are at 17.53. So we've already broken through 22. We're in full liquidation mode here. We're going to see this probably stay down for a while. So here's where the opportunity will lie. If we put on the 2020 pandemic playbook, and that's kind of why I want to come back. I was able to help so many folks back in 2020. Of course, we were all locked in our cubicles, so to speak, and so everybody was watching. But the point is that what we're looking at is a similar type playbook. We started getting buys in March, and mid to late March, early April, we started buying thousands of stocks. You may recall the Buffett portfolio that I built. When Buffett was selling airlines, we were buying them. We made 100% profit in 8 months buying the airlines, including Boeing. I mean, it was the easiest trade. Everybody thinks Buffett's such a great trader. He's terrible without government assistance. He's a buddy with every president there's ever been. He's always hanging around with lots of cash and doing the Goldman bonds in '08 and all of that stuff. Don't get me going on him. But anyway, but he was selling the airlines, and that was an opportunity. So when the database gets washed out like this, please hear me. When the database gets washed out like this, I made the thumbnail for last Friday's stream that was change equals opportunity. My very first firm I worked for was a company out of St. Louis, Clayton Brokerage Company of St. Louis. Their slogan was change equals opportunity. We've got one of the most major sea changes happening in front of our eyes. So stop talking about disasters and let's let it unfold, and we'll find out where the opportunities are. And these will come through partially through cash flow and things that we'll be able to pick up in this database. I'm watching 14,732 symbols all at once. And right now, 12,141 of them are neutral to down positions, okay? And that's been growing over, you can go through Substack, sign up for Substack, kendallreport.substack.com. Get that. Every day I have a screenshot of this, and I go through the details of what the database is telling us, and it's crazy handy to have along. And I see somebody just popped out on the screen, Sailor's going to be homeless. I can't wait. I think Bitcoin, and I'll go through Bitcoin, but I think Bitcoin, if it breaks through 71, I know it was getting hammered pretty good. It was funny because everybody in Bitcoin, look how well it's resilient, until it wasn't. And if it takes out 71.5, I'll go through this, but if it takes out 71.5, we're probably going to see 51, 43,000. They're taking it down all the way. And everybody thinks these futures and these option traders are fun. I'll save that. Okay, but let's go ahead. But this database is going to be the point of reveal. So you're going to want to even get the Substack, or you're going to watch my videos, because when this turn happens, we'll pick it up. I've been doing this for a long time. This is 45 years in 7 months, I think I was looking at. And this database has been around since 1998. And I'm just telling you, as far as a rotation goes, it has never missed a big rotation, because it's models versus you and I being emotional. So keep watching. For the moment, we're going to go through. Somebody's asking, what do you advise? You should have, man, I feel like, I've been through, many of you know on this channel, my wife's going through some heavy duty life-changing events that are going on. And I've been away from the channel just to be able to take care of her. And we've got things stabilized at the moment. And so that's, I'm here. But this is, I feel like I didn't push this WaveTech. I should push this. It's like $3 and I think $360 or $380 a day. It's $97 a month. And I'll put a link in the description when I'm done. But the reality is, this would have got you out of the way. If you go and Google Advance and Protect, all those firms and people you see, that's me. Okay, I taught every one of these guys what Advance and Protect was, and what it is you. And we kind of changed it to where you want to participate when appropriate and protect when necessary. And we've been in protect mode for the last three, almost 4 months now. So I'm just looking through some comments. So let's transition here. Let's go over and let's go to the, let's take a look, and let's go over to the E-mini on the, this I want to show you this chart, because this is the monthly chart. If you tuned in last week, what you would have saw is that I was talking about we're probably going to the 21-month moving average. I mean, check it out, folks. The red line in the middle is the 21. We almost went to the 40 so far. We're bouncing a little bit off here. That 40 value, let me bring up some numbers here. The 40 is 47.40. I got to bring up some old notes, and I've been talking about these numbers for a number of days, and including in the Substack. The nice thing, I think I have the Substack, so you can go back multiple months on everything I've been writing. And I write between 2,500 to 3,500 words, so it's very detailed. Let me just take a look here. I sure hope this is the right thread. This will make me mad if I don't. All right. I do have it. Good. Okay, here we go. So the targets that I've been discussing over the past several streams, 48.36, 51.12 to 48.36, 47.45. So 48.36, this is the futures. 48.32 was the low. So this is hitting those parameters that I've been talking about. And somewhere there's a good trading bounce here. But I don't want anyone to think that we're getting into, I just caught the low point. Whatever happens here, even if we hold these levels that you're looking at on the screen right here, it's going to be a long grind. And there's going to be a lot of really, really good trades. but there's not going to be any good investments. Okay. So don't go, hey, oh, I bought this really cheap. It's fine. And maybe you have a long, I never understood that mentality. I started in trading pits. So I watched people buying and selling things all day. I never understood that stuff. Back in around 1994 is when I started taking our models and putting them into Portfolio Manager. We built our very first Portfolio Manager in 1996, which was called Visiport, Visual Portfolio. We built it in Visual Basic, and it was an amazing platform. It was where the WaveTech and what we call VPM, Virtual Portfolio Manager, has run for years. So let's go ahead and take a look at, so the extreme number here is 4745, but we printed, this goes back to last Tuesday's stream when I did these numbers, that I said 5112, 4836 were the target range. So we've done that. Okay. Let's come over here and let me go to a weekly. Let's go top down. Let's go to the week. And I think I need to add the fib projections here. Yeah, so here was the other thing, and if you're new to the channel, one of the things I do is I use simple moving averages, and I know a lot of folks are using, different types of stuff, and I just use simple. I'm an old school guy. I came from back in the day when you had to update charts by a pencil, okay, buying chart books. But this right here was what I was talking about, is that I thought we were going to go to the 200-week moving average. Now, the 200-week moving average right now is at 4691. I'm going to go back to the monthly. And I've told you this before. If I go to the monthly, the 40 month is 4740. So the 200 week and the 40 month are similar numbers, and it usually gives me a support range. So 4740 down to that number I just mentioned. I got to bring it up. It didn't hit it in memory, but it would be just trying to find a number now. 1 second. Yeah, 46. Yeah, 40. I've got too many numbers popping out on the screen here. I don't know why the 40 is not showing up here. All these numbers got jostled around somehow. Anyway, I think it was 4640. So the point is that this is the downward range. So what do we do here? Like I said, I think there's going to be trades, not investments. The investments will come later. And so one of the things that I could go off on here for a little while, I know I'm 45 minutes in and I've just got my first chart up. So one of the things that we could talk about is market structure. When you see a bar like this one here, and you just see this straight down collapse, there's no structure to this market. So what you want to see is consolidation, patterns start to set up. This is a weekly. So even if we go to daily, it's just a complete vertical drop, right? Let me take, I just want to clean this up for a second here. I'm going to take the market grid off, but I want you to see, this is what we're dealing with. 4 days down. Look at these fib targets that came into play. Fib targets 49.38, 47.73 comes right into some of the numbers I just talked about, that extreme 47 number. There's no structure here. You want to, the old saying, don't grab a falling knife. Well, this is a falling knife. You can get lucky buying falling knives, but this is not. And you can see we're already midpoint during this trading bar right now. We've rebounded quite a bit. Look at my other screen. We're 370 sign, about 1%. I think we were down about 4.6 when we started. But we've got so much work to do. We even got a huge gap on the chart here. Maybe we fill all that. Maybe all of those things are real and you can trade them. What I'm going to wait for from the standpoint of trying to give guidance is I want to find the investment point. I will talk about trades on indexes, things of that sort, but at the moment that's not that doesn't appear to be the case. I'm just trying to look around. So I just want to make sure this. Yeah, this was a snapshot that I made earlier. This is one of our data sheets. This will be in the tonight's Substack, but we're looking at all the trends. It blew through everything that we know. There's a star, if you can see this. I don't know if you can see this or not. I'm going to try to blow it up. Yeah, so I've got it a little bigger. You see there's a star. It's just acknowledging that we blew through all of the market grid projections already today. And then if you look at the numbers, once you do it, 48, 57, I'll get some live numbers here, but all this stuff is just huge. Here's the downside 47.73. This little green bar here shows us that we're 80% to that number. So we may hit that number. That's maybe a tradable number from an index standpoint, but I would be very cautious about my size and all that stuff, because I'm looking over at my trading screen right now. The order book has I know it's overnight trading, but it's ridiculous. There is no. If you're a one lot trader, you're a big trader right now, because I'm looking at 1s and 3s and 4s. Typically, those numbers are hundreds on each side of the bid ask. So there is very little going on. So yeah. So let me throw that back up here. Yeah, so yeah, all these numbers are blowing out. Yeah, so but here's the other thing on the PPMs. Now, I worked very hard. I've had a very productive weekend. I am working on a complete manual how to use these numbers. So these require that you go into TradingView into the data window and dump in this numbers above me here. These are just the raw numbers that I dumped in, and I told this sheet to do. I built in all the calculations, the probabilities, all of that stuff. I've been working on this project. So I'm about to release this to the community. Hopefully by the end of the week, I got a lot done on the how to use it. There are some things that happen. You're going to have a Claude, a Anthropic account. So you're going to have to, this is using 3.7 Sonnet from AI, but I built in everything so it looks at this data, and I'm finding that this is a daily sheet, but you can do a weekly. It's going to give you valuations from there and all that. I mean, we could do like 2 hours. I'm at 50 minutes here, folks. There's a lot going on. Dr. M, that's absolutely funny. Stupid question. How do I sleep now? I joined a gym. That's pretty funny. So I really don't like going much over an hour. I think they get a little ridiculous doing this. It's not the Joe Rogan show, but let me try to facilitate where we are. I think we're just going to have to focus on the S&P tonight. Maybe I'm going to go through a quick view of things. I'll be back tomorrow. 8 p.m. is going to be the time. If we get into crazy stuff tomorrow, I'll come up during the market hour, probably like midday, like noon, 1 o'clock New York time. I'll try to come up. Yeah, so Tuck, you can watch the replay. I think you can even pull it back, but stay live here. That is Eastern time zone, 8 p.m. Eastern, 5 p.m. Pacific time, which that's what I'm in. I'm in Pacific time. So, well, this just works out good for me at my flow of my day. Yeah, so, yeah, I'm just looking at some comments here. So let's just leave the S&P that we're in a target range right now. We're trying to search for a bottom. When all the big guys are around tomorrow, I don't know what we're going to see. Jim Cramer could be right, and we're looking at maybe we could be looking at a full-on crash. I was showing you just a little bit ago. Matter of fact, let me bring that screen back up because this is really a good place to kind of close out. And I'm going to go through and I'll just bring up weekly charts and we'll go through NASDAQ. We'll bring up the Russell. We'll also do gold. I want to look at the treasuries. So I'm going to do all that. So we're probably going to run over 20 minutes. So keep hanging out. That's good. But this right here, if you let me see what my prompt was. Give me a list of all major declines. So this was in ChatGPT 4.0. Give me a list of all the major declines in the markets, length and percents back to 1877. So panic of 83, but this was my point. We had a lot of 30 plus declines, and most of them were 2 years. If you notice in 1987, I always talk about we had the 508-point decline in the Dow Jones was 22.6% in one day. And yeah, so we could be looking at one of these. It could be a 1 year, it could be a 6 month. Here's a flash crash of 62. It was kind of interesting because the nice thing about putting this prompt into chat is it actually tells you what was known. So in 1962 was known as the Kennedy slide. Market declined 27%. So Kennedy was blamed for that one. Of course, we got the .com, all this stuff. But these are events that occur over and over in the markets, and they're big washouts. I feel like from what I've been writing in Substack, what I've been telling you is that, hey, we're in a decline mode. We're looking for a recession. I'm hoping that you folks are giving me good grades on this. And like I said, I feel like I should have been pushing more. I always talk every night about what's going on with the database, and on like the weekends. Tonight I'll talk about the intermediate database dropping to 28% and the significance of all that. So those are things. So let's finish off the show. We're 55 minutes in. Let's finish off tonight by going through, well, I'm just going to run through. I'll go back and take a look at the S&P, and we'll just go through a bunch of markets here. Yeah, hey, Floyd, that's a great idea. Let's see, there's two response. I hate when chat does this. They give you two responses, and you got to pick one. I'll tell you what I'll do. This is somebody just, we have a private Discord if you own the I'm going to go full screen. Bear with me a second. I'm going to post this in Discord right now. So if you have, if you're part of a Discord community, let me just, I'm going to put it in the live chat. So bear with me one second, folks, and we'll go through all these stocks. So bear with me just a second here. Okay, thanks for your patience. So everybody in the Discord community, I just, matter of fact, I'm going to do one more thing here, and I'm going to capture both of those responses and dump them in there. Coming in as text, but that's okay. So bear with me, folks. Got a fairly large community here, so. Yeah, Chi-Town Tony, that's a great idea. Because we, back in the COVID days, I did share some portfolios, start using in the community. Yeah, that's a wonderful idea. Thank you so much for that. Okay, bear with me one second. I got one more. So what I've done here, folks, is if I can get everything to show up. So I put both of those responses into the Discord. So it's in there if you guys want to see it, so you don't have to do the whole chat. Market's rallying big time here, folks. We got we're down 167, only down 327, so we've rallied 1.5%. So we're seeing a pretty big bounce, and amazing off of that number that I put out several days ago. The 836 was the low, 48.36 was the low, and we're bouncing. We're now 948. Man, I'm sick missing this trade. I mean, there's a little bit of a buying panic going on, but there's no volume moving this thing. I mean, it's nuts. Very, very low volume, low liquidity. The high of the day, 49.52. We're printing 46, 40, 45 to 47 right now. All right, let's do something. I don't know if we're going to be able to escape. Let me get this set up. Let me see if I can get this to come back in. All right, now I can bring it in. So this is TradeStation. I just want you to see this order book. It's right above where I'm sitting here. As you can see how the liquidity is flashing, there's no liquidity, and you'll get that bar that's floating across. This is, to me, is like flipping you off. Like, do not come in here. This is going to be insane. And you're looking at it traded back to 34 since we traded up into the 50 handle. So that's the problem. You think you're going to get in, you're down 20 handles and nothing flat. So just this is a live values, and you see liquidity appears, and then you get back to one of these one bar. There are only 5 and 6 contracts on a bid or an offer. There's nothing here, folks. And whenever you see one of these bigger spikes in this little histogram right here, right next to where I'm sitting, let me go off screen. You can see over here the bid ask size 2, 4, 3. There's no liquidity, so be very cautious. And this is what I'm telling you, we need to get structured. There's going to need a lot of the yeah. That is very true. Floyd's Garage is saying the guys that got out can't even get out. They're dumping and they can't get out. I have anybody that's traded these markets for a while. Let me come back on screen here. Anybody that's trading these for a while, when you get into markets like this is what has happened. You'll want to buy and it'll just run away from you. You can't get filled, and then if you keep chasing, then all of a sudden they spike them down and they fill everything you have in there. And especially if you're throwing limit orders in like that, all of a sudden you get filled on a whole bunch, and now you don't even want them because they've ripped the market around. It's just, for a day trading standpoint, be very, very careful. Obviously, you're feeling good if when we were at 40, down at the 48.30, 40 number, if you bought then, you're up $1.20. You're feeling pretty good. I get it, but you can't do any size. It's very, very risky. And what I always try to get folks to realize is this structure thing that I was talking about earlier. So let's do this. Let's close this out. And let's go back to the chart. So I'm going to do a blitz here. I'm gonna run through a bunch of stuff. Let me turn on the market grid back on so we can get that perspective. And let's do some weekly charts. And I'm going to go weekly NASDAQ, the extreme. This is weekly. This is going to be weekly S&P. 47.28, 48.16 was S1, S2. So we've fulfilled most of those down the extreme 47.28, and then resistance is 50.09. So maybe you could get up to an S1. That would put us positive. We closed on Friday at 50.96. I mean, that's a big rally to get positive again. But you can see we're starting to see this rolling of the indicators. So if you're new around here and you're seeing this stuff, what's these dotted lines are the forecast change in momentum. The dotted lines on the moving averages, these are what are called the WTAR. They have machine learning. So this is what they're forecasting for the moving averages to do right now. And this is this is weekly. So 200-week moving average is forecasted to be fairly stable. That's going to be probably our bottom line. And so let me draw in a couple things. And like I said, I'm just going to do this and just keep going. So we've got this decline down. What I'm expecting to see is a move back into the 10-period moving average, and then probably a retest of this 200. And so the retest of that 200, by the way, is 56.92. So that's a big rally. Okay, that's 1,000 points. We're 48 so far. 48.30 was the low. But anyway, this is the pattern. And at this stage here, this would put us into, let me just draw this up, give you an idea. This is June roughly, where my arrow going up is. So this is going to carry us, these moving averages are forecasted to remain in a downward trend. So somewhere way over here, September, maybe November, we finally get to a point where there's a possibility of a bottom here. And what we don't know, I clean this up, is do we get a little dead cat bounce? Sorry about cats. And then a whole nother level down. Certainly is possible. Like I said, if we look at 87, I would not use 87 as a model, although, like I said, 87 was interesting because we had 34% decline from August 25 to October 19th. And that was pretty quick, and it was 32+%. And then there was no recession, no model, nothing. I was talking about my speech I did in November of 1987 in Mexico City for international commerce. What I told them is it's not 1929. There's not the end of the world coming, and everything recovered. And if you go back and do an analysis of 87, I believe it was March or April of the following year of 88, we were printing new highs. One of my main mentors back in those days, I had met him early in 1980, and he got crushed in the crash. I was telling him, I go, Frank, this thing's going to come apart, I'm telling you. And he got crushed in that thing and really got hammered in equity. And by March of the following year, he was making all-time new highs on his equity. And I remember, he got crushed for like 40, 50%. He was down hard. And he levered up and went on margin, did all kinds of crazy stuff. And I asked him how he did it, and he said, you have to have a disregard for money. Totally. It doesn't, they're just numbers. He said, if you think about it about being money, you're never going to make any. And goes to one of my favorite lines is scared money never makes any. So don't go in there being afraid of stuff. You're just going to make mistake after mistake. The psychology will kill you for sure. So, all right. So let's go to NASDAQ next. See if I can get through this stuff fairly quick. We did a lot of philosophy talking tonight, but yeah, this is interesting. I'm glad we went through here. We had, going back to January 25th, the WaveTech indicators were giving us 3 Fibonacci downside projections. If you guys remember, guys and gals, remember I was talking about this distribution pattern on the NASDAQ, and this was the targets, and we're very close to that 200-week moving average as well. But the Fib targets at the time, 17,299, and then 16,441, and it looks like the low tonight we printed 16,460. So all of these numbers are getting satisfied that we've been looking at all the way back since January. This has been the forecast. It seems somewhat unrealistic, but it's one thing after another between DeepSeek and all the different AI issues that happen in NVIDIA. I mean, we could spend hours on this stream, folks. I don't, like I said, I don't like to get them too long, but I'll be back tomorrow. So come back with some questions and we'll do more interaction tomorrow. Maybe we'll see what happens, because if we do get a big blowout, like I said, I'll I'll send out a tweet. So if you're not following me, I'm at Portfolio Expert. There's no E in expert, just portfolio, and then the X, PERT, okay? Follow me there on Twitter, and I'll put out whether I'm going to be live, or hit the notification bell, subscribe, and like these videos. Remember, we got to get thousands of likes on there. We're probably already at about 2 to 3, maybe close to 3,500 views already, just by looking at what's been going on with this stream. People are dropping in and out. We're looking about 600 folks consecutively. So anyway, let's go ahead. But these algos are suggesting that we're going to see peak momentum happen. If you recall, when I was doing these Fridays videos, I was talking about, we were looking at a possible V bottom, and we've seen this happen a couple of times during this decline, as the algos are looking like, okay, we got a possible bottom here, and they keep getting reset because each day we just have this plummet. So you have to see something of the patterns unfold here so that you can make some basis. Market structure, folks. You got to have market structure. Don't try to grab the falling knife. It looks cheap. Like I said, there was a guy on the maybe he's on now, but on the stream on Friday going, I bought 30%. I'm scaling in. Like I said, he's already down 12% on the 30 that he bought, depending on what you bought, right? Maybe you bought the right things, but from an index standpoint. But what we're seeing here is that these, a couple of things that I want to point out here, and this is going to be solid. These are weekly charts. We're not doing tomorrow, but just for the week, this momentum level is extreme. We're at 2.33. That doesn't mean anything to you if you haven't been around this channel and understand these PPMs, but that's a huge number on the downside. That tells us that we're likely to continue to be under pressure. Even if we get rebounds, there's going to be a lot of rejection points. So I'll try to, as we go through this week, to set this up so we get some good trigger points. I don't think with us punching new lows again today, you need some stabilization and structure. I think I've said that enough. Yeah, so on the channel, by the way, I just updated there's some playlists. If you go through playlist, if you go down to playlist, you'll see a bunch of playlists on the indicators and stuff like that. I'm going to redo those. I have a lot of projects. I'm working on new software. I'm working on these data sheets. I've got some other things that I've got out there. Plus I'm actually started writing a book on the PPMs. I'm at chapter 3 right now. It's 15 chapters. I'm going to stay on this thing. It's one of the things that I've been wanting to do for a long time. So that's going to be out there as well. Yeah, most of the numbers, Robert, he's talking about the 4836 applied to the SP8. I would do a computation between what the premiums are right now and all that. So I would be, it's going to be a different number, but the 36 has happened overnight. We'll see how we get played out here. Okay, so let's move on. I said I'd do Russell. We're going to use RTY. So I'm just going to barrel through. Russell's same thing. This is the famous Tom Lee. We're going to double. What we've been doing, let me move this out. What we've been doing, going back, let me get this scaling so you can see it. Let me get off the screen for a second. But what we've been doing here is we did manage to make a new high, but we go back to June 22 lows. We're very close to reprinting these lows. And I've been warning you that there's no way in hell these stocks are going to make a move. There's a lot of zombie companies in this index. There is a lot of regional and small banks in this index. And until the yield curve changes and gets completely structured differently than it currently is, there's not a chance in hell these stocks are going to move. Okay. There's not saying that there aren't stocks in the Russell that aren't good trades. I'm not saying that. Saying from an index standpoint, this is dead. Okay. So, but I've got this is a weekly again. The 200-week moving average is cutting through here. Let me just go real quick and let's bounce over to a daily. And, the daily was acting as a pretty good trend line. And I'll show you something. When this came through right here through this zero line on the PPM 200, that was a trigger to get short this thing. And man, I'm telling you, I wish that I'm back in the mode I was in 2008. I wish I didn't have to sleep. There's just so many things going on in my world right now that would be nice not to sleep. But look at this daily. Let's stay here for a second on the daily Russell. We're looking at 1640, 1560 downside projections. We hit fib target 1. And these targets, by the way, are just coming out of, see if I can get one to come up here. Yeah. But these are coming from the WaveTech indicators. What happens is I built an algorithm that chooses the high lows, and that's part of our indicator, one of the components. And it's an algorithm that that maps out the highs and lows. It's, there's this indicator's been around forever called zigzag. That's crap. And we rebuilt this thing back in 1992, 94, long time ago. We built this algo. A lot of the algos, the PPMs and all this stuff came from the PPMs from the 1980s. Yeah, I'm just looking here. All right, so let's keep rolling. You know what? I'm going to do something else here. I want to do the 10-year note. This is daily. We're getting like some peak numbers here. I don't know if the treasuries continue to move, but I just bring up the futures so we can see this. Let me move this over to the weekly. Yeah, so this downward slope. All right, this is good to look at. I'm glad we brought this up here. So this is the note futures, 10-year note futures, and we're looking at the weekly chart. We've got some fib targets on the upside here. We're getting close. This downward slope 200-week moving average is probably going to cap out somewhere there. It's 116. You're printing 113. So I would suspect that we get a rejection here. And this goes to one of the theories. It's interesting, folks. I've been doing this for 45 plus years. And one of the things that I stopped drawing trend lines a very, very long time ago. And I wanted to have a trend line, but I used moving average instead. That's why I've used the simple averages. So let me just show you a pattern that I've been teaching for years. There's a little wedge. So these moving averages are coming up in here, and I'm just going to draw arrows on top of this stuff here. So typically what's going to happen here is the markets are going to trade in this zone right here. So they're going to trade below that 200 and probably above the 10 initially. So let me pull off some of this stuff. So initially, what you're going to get is that we will stay above this 10 because all right, stay above this 10 period moving average, and then this 21 will come into play. So you're going to get the same kind of like fan lines and things that you get with the moving averages, and then ultimately this is the wedge. So you get this downward slope here, and then you're going to trade within these ranges, and then as you see the momentum starts to roll off, then you'll trade down into here. But if you spike above this number here, so if you spike above this 200, you're going to probably get a rejection. So that's going to be the peak low in the interest rate from a yield standpoint. This will be the high in prices. So we still have, let me clean this up for you. We still have a lot of upward momentum that looks like it's going to last into, this is weekly chart, maybe into June. So there's going to be a lot of flow into bonds. And by the way, this is the perfect time to mention this. If there's going to be a complete loss of confidence, the last thing that anyone's going to do, confidence in the U.S. system or in the financial system in general, the last thing they're going to do is buy treasuries. Because why would you put money in treasuries if you believe that the system was going to collapse? So this is a healthy sign that there's a lot of flow. So, and think about this. People are buying T-bills, they're lower, rates are dropping. All of a sudden, I'll bring up crude. I'm going to go for a while, I guess. It looks like it's an hour and a half. I'm not going to get through this easy. But the bottom line is, crude oil prices are dropping, interest rates are dropping, probably food prices are dropping. That's going to sound like a political statement, but everything Trump said is happening. Now, you may not like from an investment standpoint, but look at the employment numbers that came out on Friday. That blew the numbers out. Okay, everybody knew these tariffs were coming. They told us a month ago they were coming. Everybody knew this event was coming. So anybody got caught being long this market coming into last week and last Wednesday, Tuesday, whenever you want to market, sorry. I mean, that was a bad trade. I'm being really nice here. Okay. That was really a bad idea to be doing that. But these notes still have some upside. It looks like we got this is a weekly chart, so we still have some good stuff going there. So let's go from here. Let's do crude oil, actually. All of a sudden, crude printing right at 60. It was below 60. We're also seeing some potential bottoming coming in here. So we actually went through if we go back to February 25th, the low targets was 66, 64 round numbers, 61.50 was fib targets 1, 2, and 3 that were out there. On last month, this is weekly, at the end of last month, not looking at we finished off and we had a low of 60.46. So we printed fib target 3. But look at all these moving averages. Everything's rolling over. And once again, that zero line on that 200, way up here, we got a rejection up here at $80.77 on the futures, right? So it looks like we're breaking down also. Let me move this out a little bit. We're breaking down into below the lower ranges that we've been in, going back to 2023. Here was the Biden shutting all the spigots off, all the pipelines, and then turning back on. And now we're starting to see prices break down in these lower ranges. These old Fibonacci targets are 59 to 47 is possible, even though they've been invalidated. If we continue to roll, we can get that. We're doing gold and then Bitcoin, and we're done. So gold's bouncing back. It went, this is a weekly chart, did go down almost to the 10-week moving average. But as I've been talking, as we're looking at gold's probably peaked out, and the best way to look at this is we're not going to decline much, and I've already tagged this 3,000 level. We're at 3,000. We went to 29.85. That's in this week or tonight, but we still have lots of momentum rolling over. So we could get below that. Ultimately, could see 20. We're going to do big wide number 29.50, 28.30. This is not, we're not going to like resume this rally for a little bit, and it's been a heck of a run. If we just go back into the election. And by the way, did they ever go to Fort Knox and see if the gold was there? Do we know? Is it there? I don't know if it's there. All right, final market, Bitcoin. We'll stick with the weekly. I'm going to try to do my best to show you something here. This happens, it's interesting, a person that had bought my indicators going way, way back, I want to say 20 years ago or something, he actually brought this in and I researched it, but whenever these on the Fibonacci tool, all of a sudden you'll see where my cursor is this green dot. And what that green dot does is it is a pivot number. And that right now is at 71,446. So rounding to 400. We're looking at, if we break that, it's going to be ugly. We're going to the 200-week moving average. And that out of, Mike Saylor's going to have an issue here with this. That will put us right now at round, I'm just going to move it over if it were to do that, 43,000 on Bitcoin. And I've been talking about this for a while, and this is the last market coming. So this little section right here, I didn't mean to grab this pencil, but I'll do it. This little section I boxed out, this right here is distribution. And this is what I've been going on in Substack for months, is everybody in Bitcoin, or in that whole little deal, thinks that the liquidity and everything gets better if the futures, the options, the ETFs, they think all that is good for this market. Show me what's been good while all that's come into place. What it's done is it's brought what I call the bad people into the room. If this was Monsters Inc. movie, this is the monster coming out from underneath the bed, because what they're doing is all the arbitrageurs, the people that run the ETFs, the people that do all these things, bottom line is they are the ones that are causing this consolidation. And that is not necessarily, everybody thought, oh, the futures were legitimatized and it's going to 200,000. Everybody, Michael Saylor on 200,000, 200,000. I got buddies all over the place that, Bob, it's going to 200,000 this year. Well, maybe, but not before it goes to potentially 50,000. So it's going to be a pretty ugly year. If there was ever a consensus in a market that was about to be wrong, this was probably it on the Bitcoin. Yeah, I'm just looking at some comments here. All right, folks. Hour 30. That's a lot longer than I thought, but we had good participation. We had a solid, 600 folks watching all the time. So thank you so much. Do me a favor, hit the like button if you hung around for a while. Hit the like button and subscribe if you would. My channel's at around 45,000. I think it should be 100 or 200,000. You guys could really get me re-engaged here. Just subscribe. What's the big deal, right? It's YouTube. See, where are we at? Yeah, we're only down 288 now. 49.62 on the futures on the S&P. So yeah, we're definitely getting some stuff there. Anyway, folks, thank you so much. I hope you found this interesting. A lot of people hanging around, so I'm hoping that's the case. Guess what? I'll be here 8 o'clock for sure tomorrow, 8 p.m. Eastern Time, 5 p.m. Pacific. You can figure out the clocks. I will be here. We'll do another live stream. Probably won't go for an hour and a half, but depends on what happens. Maybe this is the big turnaround. All I had to do is say that the market was rallying. It just dropped like 30 handles. It's pretty funny. So be careful, be cautious trading, wait for market structure, wait for stability. There's going to be so much noise around everything that's going on in Washington and everything else. It's going to be really interesting. So I'm here. So make sure you hit the like button. Make me feel good. I'd sure like to see 1,000 likes on this or more. It will help us a lot. So thanks a lot. If you haven't got the Substack, get it. It's kendallreport.com. Try this again. kendallreport.substack.com. And that will get you to the newsletter. And we'll go from there. I will put the links in here. I'm going to show you one thing here, and then we'll. Like I said, I'm going to be doing quite a few things here from a standpoint of. So let me show you where I'm at on the screen here. So this is my link tree. So you can go to linktr.ee, Kendall Report, and here's all the products. Here's the Substack, here's the indicators, the Wave Tech, and follow me on Twitter. So everything's right here on this. So go there to get that going. I appreciate it again. Yeah, and I think just real quick, I see somebody talking about Arizona 898. Go to the channel and go to the playlist and just see. There's some explanations of my work and things like that there you can find out. Then the last thing that we can do here is if you go to that LinkedIn page, you'll get that going. So I got some new Suno music that I made for the channel earlier today. So enjoy. Make sure you hit the like button, all that kind of stuff. Talk to you soon. Thanks everybody for coming. Means a lot. We're going to get this channel going again.